Hello traders, this is Wyckoff Trader with the AM Turn Market Recap, issue number 705. We're looking at July for the 2nd. That had been a Thursday, shortened holiday weekend. Let's go ahead and get to the disclaimer. Yes, I have skin in the game. Trade my own personal account. Sardine, tuna, billfish trades are for educational purposes only. Not a futures broker and do not manage any accounts. It's my intent to show where trades may occur. What you do is up to you. You can follow my levels, ideas to profit or loss. You determine trade size, when, where, how you trade. 50 futures is not for everyone. It's a volatile, complex, and a risky business. Before you invest, know how much you can afford to lose. All right. Had a good day. We got in just about after 10 o'clock. These were the levels. You could see the market was already ripping up. Able to get on 31.57. You would have taken maybe a point earlier. If you held on, could have got yourself a 30-point run. The day before, for the most part, a little bit uncertainty. You can easily see that the market's been selling on the opening bid. We'll see it here today. And for the E-mini, it was somewhat stronger. The Dow futures were pretty much more weaker. And that would have been the Wednesday. You can easily see where, as they pushed the price down, gave a little bid from the previous support, got back to the half back, and it just kept getting a little bit more weaker. And did the same thing. Man, let's go ahead and take a look and see what they were saying the reason for that was. Well, the previous day would that have been Thursday, July the 2nd. Stocks get back ground after early rally, but still close higher. They were somewhat saying the jobs report was good, it was positive, but you can easily see that Globex had bidded the price up almost 50 handles more. Yeah, we opened up at 31.56. Not really what you want to see. And like I said before, I hit the send button, we were at 31.26. So, found that low 38 minutes, or about 30 minutes later, 31.05. Rallied a little bit to the half back, and then we sold off pretty hard and strong. Let's take a look and see how that was. Like I said, coming in, it was somewhat of a bullish day as we were coming in. The controvirus is going to be pretty much front and center on almost anything you look at. So, on the Wyckoff wave, this would have been Thursday. You can easily see that I don't have my highlighter out. We're open on the new computer, and we'll get that activated once we get everything good to go. For the most part, we opened up weak Thursday, even though we had a bit of a gap. You can see that they were hitting it on high volume. Price ran it over, inverse relationship with the bonds. And like I said, just about 30 minutes later, we got a bid, and price rallied up about to the little bit where the bottom was. Not what you'd want to see, and closed off kind of weak. Volume wasn't that great either. The mini, for the most part, same exact thing. Couple of ways to look at this. Now, as I'm making this video, if you were trying to stay short, you got slapped in your face. We're at 31.64. That's a bit insult to injury. There's absolutely no volume going on Globex. The news seems to be that the British pubs are starting to open up. The news seems to be that the virus isn't as hard as they initially anticipated. And once again, the market seems to be discounting the numbers of the virus. So you got to be a little skeptical because the volume wasn't that great. I believe I got it updated. 1.1 million. That is definitely not a selling climax. Not what you want to see. Oh, that's interesting. You never know. Looks like Chrome doesn't want to move that fast. We'll get back to the E-minis. But it's quite interesting. Alright, I think we got the E-minis right here. You could make the argument that even though it was a gap and crap that they pretty much got the bid in at the previous day's high, you can make that argument. You could say as we came in, we opened up a little bit of a high volume, price, was offered down. Volume came in pretty much what we'd consider the preliminary support, selling climax. It's hard to do it as a trader because you're always like looking at the macro or the micro, whichever the smallest would be. I recall when I was first starting to trade, if you ever had an old car, my dad had an old truck, and he kept a rug, not a rug, I guess what's a rug, a mat over the floorboard. But, you could pull that mat up and the truck would rust it out at the bottom, and you could actually see the highway on the bottom as you were driving. And I got to admit, sometimes I did try to drive the truck by looking at the highway, by looking at the floorboard and not looking at the windshield. Not a smart thing to do. And a lot of times as a trader, we try to look at the real floorboard and just trade within that next minute. Some of them look at ticks and just trade within that next half a second. That's why most traders will have their chart scaled at 5 minutes. That you can't compete against the algos at a 1 minute, and I agree with that. And like I said, these are 1 minute bars, but we're looking at the lines on the chart, which is 10 minutes. But you can easily see if you just focus on what's happening on the floorboard within that tick or within that particular moment, you can't really see the bigger picture. And that's really the main thing. So as traders, we're always trying to get in here, get in there. We don't have the deep pockets to do that, actually. So if you look at the supply line, you can easily see it right there. Okay? So I know it's hard. And you could say, well, we could have our bid at, where we had the high of the previous day, and maybe you could. But you still want to see it break that supply line, okay? And for the most part, you got a match and supply line coming in there. So it broke the supply line, then it pulled back. The other thing you want to see is a little volume coming in here, which it did. You can easily see that price is getting a bid there. But the algos are just going to push it lower and lower and lower. This particular time, you can see the floor trader pivots. Had a pivotal, I couldn't resist that. A pivotal roll in what was going on with the market. And we got somewhat of a bid, but still yet, had you just waited, and it's not easy to do, okay? And it's okay to scale in. I'm just saying you never know when that low is in. So we get this extreme push up. That's a bit of a sign of extreme pull back. Last point of support, it's not going to go to the moon, but if you were wanting to get long without any levels, that actually wasn't the best place to do it, because at this point right here, you were getting your lunch ate, and the algos were just, having fun with what they do. Now, unless you're an insider, you knew what the flow was of the market, and you knew what the algos had in mind, you're still taking a chance. So the best place to gotten on would have been after you see the breaking of the supply line, and then a pullback to test that supply line. That is not me. That is Wyckoff. That's Wyckoff. He has the buying and selling test. I believe it was 9 or 8. I'll have to look up to make sure. And that's one of the tests you'd be looking for. That supply line was broken. Now, as price moved up, it's only natural to see some of that supply coming in here and then a pullback. So once again, had you really wanted to just wait till all the ducks were lined up in a roll or add to that position, then obviously you'd got to pull back on that major sign of strength, last point of support. Now you got a couple of things going for Wyckoff. That'd be one of the other tests, would be a potential base with the forming. Yes, it's not the base at the low, but that's not really the problem. You can easily see that we had preliminary support coming in there. We had a base. So it's only natural, the bigger picture, that his price was to play around during the lunch slog. You'd really have to be careful. I'm almost like the best trade to get on would have been right up here, and you would have just closed out and then left for the day. But either way, as you can see, as we're lining up for the 3 o'clock hour, it's only natural to see price start to get a little bit weak, hitting the offers all the way down. Now, once again, Globex is not the same. You know, we've had a 4-day weekend, and everyone was saying who wants to go home long on a 4-day weekend, and it looks like someone did want to go home long, because now we're at 31.65. I think that was 31.05 was the lowest, and like I said, the highest was 31.56. I won't go back up because I'll lose my cursor. You can easily see that as we're putting in some lows, the volume came in. Now, we could argue and say let's market on close orders. There was a large sell imbalance, and the traders had to line up and take the other side of the trade. You know what? That's most likely what it was, because they definitely were selling at the open and selling at the close. It's hard. It's hard to wait. But the best trade of this particular day would have been going short here at the late 9:50, 10 o'clock, once you see that rounding over. Why is that Wyckoff? Well, simply because we gapped up so much, okay? And we moved up so much. We were already, for one, at the floor trader pivot. That would be pivot, R1, R2, and R3. That it's really highly improbable that the market could have kept going up unless there was some really good catalyst. And once again, the jobs report wasn't bad, but it's more the tendency to want to sell into that good news. Take that for what it's worth. So once you could see the volume coming in, the best thing to do would have been to help the composite man, help the market, and waited till it's rolled over and, of course, gotten short. Then you would have closed there, and you had waited for those late to the party bulls, which especially there were, because they're actually buying it on the low of the previous, the high of the previous day's test, and then strangely enough, you'd have waited. You could see that it wasn't able to exceed and take it up any higher from the opening print. You could have gotten short again. That would be the best riskless. There's still going to be some risk, but less risk, or the best riskless trade for that particular day. And then, of course, got down at the bottom. But a lot of traders want to be bulls. A lot of traders want to catch a falling knife. And if you want to catch that knife, like I said, the best place to catch it would have been there, or would have been there. Hope that helps. Cash, it's pretty much all the same. Only thing different about cash is you don't have the volume, so it's you get the same reflection, same thing. Not a whole lot to say. With cash, just a couple of things you can see differently, though. Not always, but you can see that the market's opening up. But what you got to think about is overnight, Globex has already been trading. So it's not like it left from there. It's been trading all night. So when it opens up there. But it's already been painting bars all through here. So when cash opens up, you can see that it's just opening up. So I'm going to try to make this easily understood. As you see the bars moving up, you can see the price behavior, the price extent is able to move greatly increasing. But then if you really look closely, it's each minute, these are minute bars, the extent of the move up is diminished. So Wyckoff would call that shortening of the upward thrusts. Now when you lay the Wyckoff wave on top, then you can easily see that they were selling into that rally up. Then we pull back. Of course, the Wyckoff wave is already showing a sign of weakness simply because it was not able to hold the half back. It pulled back less. cash is a little bit strength. So you want to be looking at this rally. You can see now that cash is actually a little bit higher. But once again, we don't have the benefit of the volume. That's the only downside when you look at cash. But the Wyckoff wave is just pretty much just trading even. And that's the takeaway. Now you could argue the late to the party bulls, folks that shouldn't be trading at all, that the composite man, he's pretty much not moving price up anymore, and the volume has stopped. And now the public's getting in, or the common man's getting in. And it's only natural to start to see it. So once you see this movement down, okay, if you wanted to wait and got short when you saw that rally, not a bad place to be, because now you have a little bit marker. And I'm not a big fan on putting stops in right on behalf there. I mean, Wyckoff would say you'd put a stop way up there. He looked at stops differently than we look at now, but they still did the same thing. You can see on the E-mini, you get that same type of action. So that's why we actually have the two. But for the most part, sometimes they're going to give you the exact same thing. And you can see it right there. You know, WB would have said wet beat. It wet beat that previous rally. And if WB was alive and he was in chat, he would have said that the bulls need and the bulls want, simply because we had a gap. So he just said the bulls need to reclaim that previous high. And you can easily see they didn't. It doesn't mean they're extremely weak. It just means that they were unable to. So if the bulls are unable to reclaim the high, it's only natural that the bears are going to try to reclaim their low. And once again, one up and make it lower. Now, as we look at the my man Berkshire Hathaway, I think it's 226,000 share stock. So you want to look at that in granularity, okay? Now, Wyckoff, how do you know they were selling? Well, think about this, guys. If there's a $226,000 share per share stock, okay, and at the moment the opening print is the highest volume, and I'll play with that volume and get it up some more, and then we pull back and then we rally again, just like the Wyckoff wave, they were selling, okay, as simple as that. You can see this big volume spike right here. What do you think that was? Okay, if these were like 10 shares or 5 shares, how many shares do you think that was? Get it? So yeah, they were selling. That's why we have the Berkshire Hathaway as a comparison. So yeah, it didn't get below the previous day's low, and that's okay. But you can easily see they were selling into that rally. And once again, Global Axis trading 31.64. Take it for what it's worth. This is going to be on the YouTube, and of course the audio is going to be in the newsletter. If you haven't, I would encourage you to subscribe to the YouTube channel. I'm going to be more consistent. Did a run through to see how this would work on the new computer that we're building. It is really a pain transferring from Windows 7 to Windows 10. Yeah, I possibly should have done it before, but I guarantee you, once we get all the software on, and it's really been a challenge to get the Vegas software, the Boris software filters, and some real neat audio filter where you can edit audio files like you would in Photoshop. Spectral layers, I think is what it's called. And get the MySQL database transferred over, and get the Java over. We'll stop using NetBeans and go to Ideal J, I think is what it's called. And I swear that wasn't around 6 months ago. But hey, a lot of females are making more programming tutorials, which I'm all for that. These guys don't know how good they've got it. We're going to wrap it up. If you haven't subscribed to the YouTube channel, subscribe. That's just the easiest way I can put it. We're working on a website. It's going to be pretty neat what I've got in mind. I apologize. It just took a while to get all the motivation for what I really was looking to do, and appreciate everyone that's been subscribing. We're going to put a glossary together, some free training resources and some paid training resources about understanding the clock, understanding WB, understanding Wyckoff. A lot of fun stuff I'm looking to do, but I definitely got to get Ruby's on Rails up and running. I just do not want to write it from code from scratch anymore. So I'm throwing in the towel and working with the framework for the first time. So once again, I'm going to see if I can't put a link to this particular PDF file in the notes. Put a link, obviously, to subscribe to the newsletter, and of course subscribe to the channel. That should be just a no-brainer. That's about all I got, with the exception of be nimble and be quick, and don't let the market make you sick.